Hello, welcome to FountainFX on Thursday the 24th of April 2014. We're looking at the Euro US dollar on the daily chart, just really to say, look, at the moment the Euro US dollar is a bit difficult to trade. It's very much in a channel bound situation. Prices bouncing up and down between the 138 and the 138.50. It's been doing that for just over a week. If we look at that, 1, 2, 3, 4, 5, 6, 7, today's the 8th day in a row that it's been sitting in this channel, so it's getting a bit frustrating in terms of it's not really trending. At least it was trending before, it was trending there, now it's just going sideways. So what I need to do is share with you the key requirement in this instance is really to look at support and resistance levels. So if we go down to a lower time frame and we look back at yesterday's trading, where we can see with early hours with the Asian session, 138 was the actual area of support. Price rallied up, pushed higher, and then came all the way back down into it before it turned and rallied up all the way up to the 138.50 level. So the European Open yesterday gave a very nice trade of 50 points. Since then it's sort of gradually traded down. We had a short in the afternoon, so Europeans went long, Americans went short, and price ended up at the end of the day down here at the 138.13. So I drew a line there for support for the Asian session, which does actually confer with the Asian session before the European session opened. Also drew a line for support previously at the 138, and then going back up we're looking at areas of resistance at the 138.40 area and the 138.50 where price has been. So let's just see exactly what happened with the European Open, and then we will close for today. But if we go to the right, we can see that price moved just at the start of the European Open. We can see when the Europeans start to come in because we get momentum in price movement either way. So price is now pushed down. It's pushed down into this area of support. Now it could have carried on through, but it hasn't. We've now started to see that bearish candlestick be replaced with bullish candles, and we can plot a trend line on it, and price is now broken up. It's broken above this previous area of resistance, so now it's basically saying yes, it's bullish, so you should be buying. At this point you should know that you should be buying. You can wait for a pullback if you want to, which is very nice, and it pulled back down into this area of price movement or resistance previously, so you could have got a nice fill probably around about the 138.24, maybe around about the 138.24 would have been a nice fill there. And then price continues up. We get a bit of sideways movement as we're starting to go through order flow. If we look back here, there was an area of order flow as price went sideways here, and then it continues on up with a target of 138.40. Buying at 138.24, you'd have made a nice 16 points profit, which is exactly what I did. So that's me sharing my trade, and we then get a pullback and confirmation that price is not going to go above this area of resistance is the fact that it's now broken this trend line. And from there, price then falls quite rapidly all the way back down to the area of support. So it's just showing you how valid support and resistance is. And if you can start to look at good areas of support and resistance, then that will help improve your trading and your profitability. And that's it from FountainFX. Have a great day, and we will talk to you tomorrow.